Josh, we're sitting here in the fall of 2024, and albeit a lot of negative headlines throughout the year, markets have had an incredibly strong year. Over the last 1 year, markets are up almost 20% for a diversified investor with 60% stocks, 40% bonds. And I think an obvious question is, where do we go from here? Right? There's been a lot of these negative news headlines. Should I start to get nervous? Should I hold back if I have some cash and not try to get invested? I'd love your perspective on what an investor should do from here.
Absolutely. So a lot of questions that we get are, we haven't seen volatility in so long. The market has just gone up. We've had a great 2023, a great 2024, despite recession calls and fears in the market. Really, should I be investing at these all-time highs, or should I wait for a down day in the market? So we're going to pull up a graphic here, and on the left-hand side, you're going to see a chart that shows performance of the broader stock market, and the small green dots that you see are any time an all-time high created a market floor. What that means is from that point, the stock market never fell more than 5% below that level. So if you avoided those all-time highs, you would have missed out in a vast majority of the upside of the market. And in fact, 30% of the time, all-time highs create that market floor. So it's a great opportunity to take a look at. And if you're waiting for a down day, you may be waiting a long time if you think about that.
It's back to what we've talked about many times in the past. Trying to time the market is incredibly hard. Being invested and staying invested is usually the right course. We say all that to also recognize that volatility will exist. We may not know the reasons today, but it's going to happen. And that's why we believe deeply in understanding your cash needs from a portfolio and making sure that the portfolio is serving your financial needs rather than the other way around.